Good afternoon, everybody, and thanks for joining me again for another episode where we dig into the analysis of Bitcoin, the SPX, and we see where things are going as we're leading in and continuing on through this week. So, as we're looking here at the Bitcoin price chart, we can see that we have basically been whipsawing about and taking out liquidity both to the long and to the short. Just less than an hour ago, 38 minutes ago, we closed a candle where we were down 1.29% in just 1 hour, where we've had the entire move from the wick from 6 o'clock this morning down to a low of 3%. So we were actually managed to capture a little sell spot. We were able to buy it at market to short down to here, and we caught just a little one here as we had price coming through. I'll set up our horizontal raise. I'll put up all our layers just to sort of show. I know it's looking a little bit busy, but I'll do my best to clean this up and make it look tidier with all our price ranges that we're going to moving forward with our liquidity levels. But I was looking at this level here at 60,350. Now it was support, broke through, consolidated, broke through with another, so one imbalance candle, two imbalance candles, and I was just targeting the lows of those candles, and we were able to capture them once again. So basically, whenever there's an imbalance candle and that wick comes through, especially if you're bouncing from range to range, you are going to come back and at least cross these levels. Maybe you're not going to come down and mitigate this level like we have here, because we've got two candles side by side, or a mitigation of a wick like these ones here. So that was the target. We managed to hit that target, which is fantastic. Now, also, the reason why I was looking for a short up here is because we blew up so quickly at so late in the US trading day. It was 6 o'clock in Australia, which makes it probably, don't pick me, maybe 5 o'clock, 4 o'clock US time. And then we were, I'm probably right depending on which side of the US we are, but basically we came up to this daily liquidity level, rejected off, and we just started to come back down. So we ran out of volume, we became exhausted in that impulse up. Consolidation, impulse, exhaustion, come back down to retest. And basically we're taking out liquidity. There wasn't enough liquidity to push it higher. Alright, so let me also just show. These are the progressive trend lines that we've had playing out. So as you can see, let's turn off those price charts just to make it a little bit clearer. We've got the primary uptrend. We are in bearish zone. We had exhausted the downtrend, so we were in an overextension of the bear trend, and we need to come back down to retest to confirm that this actually is going to be exhausted. We're in an extension beyond this trend line. So we had two bullish trend lines, one bearish trend line. We're exhausted on both the absolute shortest bullish trend line, the intermediate bearish trend line, and we were at a daily high. So it was a natural level where we were looking to go short from there. So that's why we took that zone. And so with that being said, let's turn that off. Let's turn off the trends. We'll turn off the trends, turn on the price chart, and now let's look back down here. Where are we going? Alright, so here we go. Alright, so what we've got here is we've got mitigated, all mitigated. So everything is just being cleaned up over the last 2 days. Everything is absolutely flushed out. And so with all those liquidity levels, it's just whipped backwards and forwards and really tidied it up. So now we get to step in and make it messy. So we've got support levels, fresh support levels at 58,540, 58,780, 58,875, an additional one at 59,220, and that's all the lows that we've got there. Now we've got a new high at 61,800, a new resistance level at 61,500, and that is it. That is, sorry, excuse me, this one is still unconfirmed. However, within 16 minutes, that will be confirmed as a new hourly liquidity level, which is super cool. Great, so they're the levels that we're looking at. They're the new levels. We've got all this open area to play with, so price will move any which way. We can either look at it to go down to sweep further liquidity to come up higher, or we're looking at price to go up to challenge these levels and come down lower. So obviously that also means that price can also go down or up. So that's basically our 4-dimensional bias. So we're either going to go, if it does nothing in the middle, if it bounces around in the middle, we do nothing. If it goes down, then we look for these levels. I wouldn't buy at this level. I would start to buy at this point of interest. These would be that would be the zone that I would be looking at through there. That's a point of interest long. And I would also be watching the levels here to see how price challenges here as a point of interest to go short. So, but we've also got the anticipation that we do have these hourly liquidity levels up here, up near the 64,000, which is kind of like the, once we're there, we are kind of starting to break the ceiling, but we are still got the Jackson Hole. We've been talking about it all week. When that symposium happens, there's a lot of conversation. So here we're kind of like, everyone's whipsawing about, everyone's just being wicked out of the market. So we want to keep our target profits, take profits very close, and just with the shorter moves, shorter time frames, we want to just capture those little moves, little nibbles as we swim with the sharks. So that's what we're looking at today for Bitcoin. So we want to look for those zones. Let me also just make a point, sorry. That's more buy levels there as we start to look sort of down towards the 58,750 level. Alright, so let's go up to total 3. Alright, so we are still in this bullish uptrend. We have come down and we've pulled back, but we haven't pulled back as far as what Bitcoin did. We're still up. We have, from the impulse, we're still over the 50% level just here. So there is a potential for a further mitigation back in this uptrend. Where's this one? Alright, in this uptrend, we're still in the buy zone, but we have overextended outside of this bullish trend line. We have overextended. We've touched the 2 standard deviation. So we will be wanting to sort of, because this is such a high time frame bullishness, I do want to see this actually come back and start to touch a few levels. So with the price of, I would like to see this come back to around Tesla liquidity of sort of 577.5 billion. That would be a level that would come in, and we'll see where support lies, where there's enough money in the market to keep everything buoyant. And I would start to be getting really interested as prices come down to 571,800 billion. So we want, if price comes down to here, then there's going to be some fantastic buys in the crypto market. We will be looking and moving on more than just Bitcoin. We'll be looking at places like Solana, perhaps Casper, maybe Om or Ton. So there are a few that I would be looking at, other cryptocurrencies. All right, so let's look at the S&P 500, the SPX. So we're still in this very nice bull run. We're still on the buy side of the liquidity. We have support at 5,608. We have a second one at 5,596. So they're the two areas that I would be looking at in the. I'd actually would be looking at this one here. I'd like to take a little bit more of a deeper buy if possible, especially in this shorter time frame, but with very close targets, because coming up to Friday, Saturday, it's going to be very interesting in the market. So we want to look for a deeper sell-off, a mitigation, and then a rally from there. So that's what we're looking at in that zone. If we look at the DXY, the US dollar had a small rally this morning and then sold off. So it's interesting that we are almost in parity to the euro and the Japanese yen. So we're almost sitting at that price with $1 off really. Down here is when €1 is $1, which makes the US dollar very weak. So we're looking at the potential where we've mitigated these areas, but we've got a lot of resistance as we come above. So I don't see the US dollar getting above 101.30. And because we do have this trend line, we are coming down in this direction. Let's just pull up a regressive trend line from this current high. We drag it down. We can see that we are in the sell side of the downtrend. We're in the supply side of the downtrend, the sell side of the downtrend. And we haven't come up, but we are basically falling away from this level. So not that we trade the US dollar, not that we trade the US dollar index either, but we are coming down to target these areas. So we've broken a new daily low, and this is an area which will be a level of liquidity, but there's definitely if you did trade this, then it would be a level to target the 101.30 and maybe a second one of 192. So they're the two levels that I'm looking at that as we're starting to fall away. So we've really got, in the next 24 hours, we've got 24 candles. So that will show us a lot more. That will give us a lot more confluence whether we are going to start to break out of this whether this is a low and we are going to start to break out of this downtrend, or whether it's merely just going to be a continuation. We don't know, but it's pretty clear that from the 15th of August, we've had this sell-off. There's been weakness in the market, and that will generally mean that if we do have this weakness in the market now, once we get confirmation, basically we just need to hear a story and we need to hear them talk. Once they speak, there'll be confidence in the market because now traders will understand, maybe not me, but traders will understand that the government has an idea and bankers have an idea. And so if this is selling off now, there's a good chance that this is going to be a sell-off into a rally leading into the weekend. But we can only assess what we're seeing, and what we can see is that this is a downtrend, and so we play the downtrend. Don't try and buy a falling knife if there's no evidence that the knife is anywhere near the bottom. So that is it for today. Thanks for tuning in. I hope there was a little bit of information and for liquidity levels and little targets for you to reach for. So I wish you every bit of happiness and success in your trading, and we'll see you tomorrow. All right, bye for now.